Okay, in this video today we're going to talk about Forex trading styles. We're going to talk about 4 different styles: scalping, intraday, swing trading, and position trading. So I think the most ideal trading styles are going to be swing and position trading. You know, everybody knows that all the pips are in the higher time frames. Under certain situations, we'll talk about intraday trading and how you can trade that way, but you want to almost completely avoid scalping if possible. Okay, and this is in our 35 lessons. This is lesson 21 from forexearlywarning.com. forexearlywarning.com. Okay. So the first style we want to talk about is scalping. So with scalping, I think you're not in the trade very long. You're generally in the trade for less than 15 minutes, 30 minutes, something like this, looking for 10 to 20 pips of profit. You're looking for a small amount of pips, and you're in and out. It's a quick hit. And once again, most Forex traders do scalp, but we're going to try to prove to you in this article that this is not really the best way to do it. We have enough powerful tools at our disposal to where we don't have to scalp, but we understand that people do scalp, and we just don't think it's the right way to trade. So if you're looking for 10 to 20 pips on the smaller time frames, like the 1 minute or the 5 minute time frame, you're a scalper, but that's really not the best approach to trading the currency market. The next approach to trading the currency market trading style is intraday trading or day trading. I think that this is at least plausible. On the day trading, you're trading on slightly larger time frames, not the larger time frames, but slightly larger time frames like the M15 and the M30. You could be the movement cycles that occur every day in the Forex go up to 5 or 6 hours, and we'll look at an example here. So if you have a market that's ranging or cycling up and down on the smaller time frames, you might want to consider intraday trading. And it's pretty easy to spot on the charts. If you go to the charts and do a multiple time frame analysis, you can click on it here. You can see if the pair is cycling up and down on the small time frames. So I think on an intraday trade, you're looking for anywhere from about 20 pips, but really as high as 175 pips. Let's look at this example here. This is one of our trading tools. It's called the Forex heat map. You can see the Aussie dollar is weak. If the Aussie dollar is weak and there's any euro strength at all, the euro Aussie is going to go up. Also the pound Aussie. So in this particular day, the euro Aussie rose 0.92%. You can see this is a big move. This is not this is in the main trading session. You had about 110, 120 pip movement. This is the M15 time frame, so this is an intraday trading time frame. And as soon as the cycle was over, you're just out of the trade, because the definition of a day trade is you enter and exit the same trading session or the same day for a stock. Forex be the same trading session, the main session, and you exit. And so you take the bulk of the move, but you're out. Now remember, this is the M15 time frame, so each one of these boxes is about 1 hour. 1, 2, 3, 4, 5, 6. About a 7-hour movement. We said 1 to 6 hours trading in the main trading session. And this is the euro Aussie on the M15 time frame. There's your trading signal from the Forex heat map. So this is an intraday trade. The Aussie dollar is weak, driving the movement. Movement cycle about 110, really about 120 pips. And intraday trading cycle, when the M15 trading cycle ends, you exit the trade. This will be about 11 o'clock Central, noon Eastern in the U.S. That's when most of these movements end on the foreign exchange, on the main trading session. All right, the next trading style we're going to talk about is swing trading. Swing trading, now you're moving into the higher time frames. You're moving into the H4 time frame. So the H4 time frame cycles is what you're playing with swing trading. Here's an example. Here's the Aussie US dollar on the H4 time frame. And here's our, these are called our free trend indicators, our Forex trend indicators. You can learn all about them here, set them up on your trading platform just by clicking on that link. So you have a fresh trend building on the H4 time frame, and you have the swing cycle, and then when the cycle is over, you exit. So that's your exit point. So each vertical bar is about 4 hours. This is about a 3.5 day cycle. This is a swing trade on the foreign exchange on the Australian dollar against the US dollar. Now, you can get a pretty good move here. We don't have the scale in here, but this, typically on the Aussie dollar, on a swing trade, about 150 pip cycle, possibly a little bit more. And so the Aussie dollar is not quite as volatile as the Euro Aussie in our example above. So you're playing the H4 time frame. You're now a swing trader, and you're tending to hold on to the trade several days. Here's 3 different examples of swing trades right here. We can talk about trading in the direction of the trend, trading on a pair that's oscillating and cycling and ranging. A pair that's oscillating and ranging is going to be cycling up and down in a range. But on the H4 time frame, so a bigger time frame, this could be oscillating. We cut the chart off here, but you can see that the cycles are over. You're playing the cycles on the H4 time frame. Or if the major trend on the larger time frame is up and the pair sells off, then you just re-enter the trend here. The trade here, the Aussie USD, in the direction of the major trend. So the higher time frames might be pointing up on this pair. 3 different styles of swing trading on the H4 time frame. Okay, the next trading style is position trading. Now you're getting into the much higher time frames, the D1, W1 time frames. Okay. So the higher time frames. So your D1 time frame on a position trade, you would just switch this to the D1 or W1 time frame. So instead of working with the H4 time frame, if you see a fresh trend developing on the D1 or W1 time frame, now you're trying to trade that cycle. You want to get in close to the beginning if you can, but on the D1 and W1 time frames, you can also trade trend continuations, because these trends might go on for, a D1 time frame trend might go for 10 days. So you can get in fairly early on the move, second or third day, and you're still probably pretty good. W1 time frames, sometimes they can go for many time frames. So you can get into a trade and stay in the trend, stay in the trade in the direction of the trend for a long, long time. Entering these trades on the higher time frames, you use the smaller time frames to get into the higher time frames. So in this case, in the Euro Aussie, it moved up on the Aussie dollar weakness. But if this was trending up on the higher time frames, you didn't necessarily have to exit. You could have exited the whole position, or you could have just scaled out lots here and then continue to ride the higher time frames. Okay, the D1 and W1 time frame. Now, these, if you want to learn how to set up these simple exponential moving averages, click right there, look at the Forex trend indicators. And if you want to learn about our live entry management system called the Forex heat map, you can come right over here and click on this link, and you can learn all about the Forex heat map right here. It'll teach you all about it. So you can get into an intraday trade, a swing trade, or a position trade using the Forex heat map. So this is the money management ratio and trading styles. Let's go through the whole thing here, and let's go through what it is we're trying to talk about. If you're a scalper, you're trading the smaller time frames. It's not desirable, and I don't really think anybody should do it. It's not necessary with these great tools we have, like free trend indicators and the Forex heat map. It's not necessary to do this. Intraday trading, you can approach intraday trading with this trading system. And I think if the market is kind of choppy, I think you could probably default to this trading system. And you're still looking to make, like I showed in the example above, you can make 100 pips on intraday trading with this trading system, with the Forex early warning system, because of all the powerful tools we have. You really want to do as much possible swing or position trading as possible. If the market is trending, go with the higher time frames and go where most of the pips are. And then you can default to intraday trading if the market starts to get choppy or is not trending. And then scalping would be something that you would probably not want to do at all, or just maybe do extremely sparingly. It's not necessary to scalp. Most Forex traders scalp, but it's not necessary because we have a much better trading system. So look at these hold times, several hours. The trade I showed you above was about a 5, 6, 7 hour hold. Swing trade, 3 to 6 days hold. I showed you the H4 time frame above. Could be even 7 days. Position and trend trading. I mean, these D1 cycles can last for days. You can go for a long time, out to several weeks, holding positions on the D1 and W1 time frame. The W1 time frame, you can definitely hold it for several weeks. So, as far as trading styles, I think the Forex early warning trading system is based on the higher time frames. We do know that some people do scalp, but we think that we can get most scalpers to start moving towards the H4 time frame and larger. We think we can take most people who are scalping and turn them into swing traders or position traders with our trading system. Got much better money management ratios, much better than scalping, and you can trade 28 pairs. And if the market does become choppy, if the market does get bad, you can certainly default back to intraday trading, but you're still looking at making considerably more pips than you are with scalping. So we have strong tools like the Forex heat map to make the intraday trading or shorter term trading possible, or you can also use our tools to enter trends that exist on the higher time frames. So this is your 4 basic trading styles: scalping, intraday, swing, and position. Swing and position are the best, and intraday, you can do intraday with our system, and you would want to avoid scalping as much as possible, unless it was just absolutely and totally necessary. So this is lesson 21 in our 35 lesson package. So our 35 lessons, you can click on to see them all right there. And this lesson is from forexearlywarning.com.